It's a common concern for clients that approach us initially. Most of our clients have more than one property. Often they have their own home, which is absolutely fine and positive equity, and they may have a buy-to-let or another property they purchased maybe 2004 to 2008 where they have significant negative equity. They're concerned about dealing with the negative equity issue in case it can affect their home. That's why we employ a detailed case review service to look into the client's circumstances and determine exactly what their options are. In the vast majority of cases, we're able to deal with the negative equity property without any effect to any other assets that the client owns. It's a relatively common concern that clients would come to us with, where they have one or more properties in negative equity and potentially other properties, including their home or other assets, which either have no debt against them at all or are in a significant position of equity. Once we've completed our case review process, we'll have a really good idea exactly what sort of settlement and what sort of deal can be done to deal with the negative equity and those properties. And in the vast majority of circumstances, there's no detriment or issue in terms of the equity and other assets. Having completed hundreds of negative equity debt settlements for clients over the past 5 or 6 years, we have a very good understanding of exactly the parameters that each lender require. And obviously these differ. At any one time, we could be dealing with over 700 live cases with a variety of lenders. At the very start of the process, we complete a case review for you. And in that process, we'll assess your current, potentially future affordability, look at the level of negative equity, look at who your lender is, review your lender documentation, and pulling all of that information together will give us a very good indication of exactly what it will cost you to settle your negative equity debt and be free of it. The cost of settling negative equity differs depending on your current affordability, your age, potentially your health, which lender that we're dealing with, and the terms around the settlement itself. But in the vast majority of cases, we're able to negotiate debt reduction of 75% or more of the negative equity sum. Selling a negative equity property is definitely not always the best option. Whenever we complete a case review, we look at all available options for the client. And actually what makes us unique in that field is that within our FCA licence, as well as having the necessary permissions to negotiate settlements on clients' behalf, we also have a credit broking licence, which enables us to make a recommendation to propose a new deal to the existing lender as an alternative to some sort of debt settlement, if that's appropriate. The purpose of the case review is to enable you to make an informed decision. Because we have all of the debt solutions under one roof, the case review is a low-cost way for you to find out precisely what all of your options are. We can then compare them, advise you which is the most suitable, make your recommendation, and then you can make an informed decision.
A case review consists of 3 distinct separate pieces of work. The first piece of work is how did we get here? The second piece of work is where exactly are we now? What's our current levels of affordability? And the third piece of work is what's the best way forward? The protection that you have as a customer at CD Fairfield is that we are fully licensed and authorised by the Financial Conduct Authority for all of our work in the UK. Our success rate is that we have achieved a successful outcome for over 96% of clients that have commissioned us to look for a debt resolution or a debt write-down over the last 5 years. I think our clients in the main are very happy with our service. Our independent reviews would say that 99% of former clients would give us a strong recommendation to somebody else who was looking for this type of service. So I think that that speaks for itself. As a client of CD Fairfield, every option that is currently available to you in the UK property debt market are available to you here. We're the only company in the UK that currently offers that level of service. On average, it takes between 12 and 18 months to negotiate the sale and settlement of a negative equity property. Most of this time is taken up with the house sale. We get asked all the time why a bank would consider writing down a debt, and the answer to that's quite simple. In the first instance, the bank lent money based on an affordability criteria. If one of our clients' affordability has changed due to circumstances that are beyond their control, the banks are really obliged to look at that again. Currently, our biggest industries of our business are clients that have previously used the service, which I think says a lot about the service. We work with a number of different types of businesses, namely estate agents, IFAs, mortgage brokers, and also accountants. Anybody who has clients that are in distress and need a safe pair of hands to refer them on to.
Every case is different, and that's why at the initial stage when we complete a case review for a client, we look at their short-term, medium-term and long-term affordability. If it's affordable to service a debt during the property sale, obviously that's what you should do. If it's unaffordable, well then we'll have to go back to your lender and negotiate either a reduced payment, or if it's completely unaffordable, naturally payments would have to cease. A negative equity property sale is very different from a normal house sale, and the key reason being is that where the bank is not being paid 100% of their debt on or before the day of the completion, they have a significant say in terms of how the property is sold and when. The key ways in which a negative equity property can be sold: there's a shortfall sale, where effectively the borrower markets and sells the property with the lender's consent. There is a lender sale, where the borrower hands the property keys back to the lender via voluntary surrender, and the lender sells the property, and in some cases, obviously, where there's significant arrears, the bank can repossess the property and sell themselves. The best way to find out if your lender writes off debt is simply to get in touch with us. We have a huge amount of data from all of the settlements that we've completed. We have very strong relationships with all of the major lenders, and we'll be able to tell you very quickly if your lender writes off debt, and following a case review, how that would actually work for you. Once you instruct us to help you with your mortgage lender, your file will be passed to case management. Our case management teams have decades of experience in the banking sector. Many of our employees are ex-bank professionals and have been working for our clients and negotiating with lenders. The case management team will effectively take you through every single step of the process, liaising with you, keeping you up to date, negotiating with your lender to achieve the best possible outcome. Initially, when you come to CD Fairfield and you ask us to review your case, we're going to obviously obtain your original mortgage file. We're going to ask you to complete some forms. We'll need to see your bank statements. We'll need a proof of identification. We'll need some proof of income and any other documents that you or we feel might be relevant in terms of reviewing your case. Beyond that, once you've instructed us to represent you with your lender, periodically we will ask you for additional documentation, such as updated proof of income, bank statements and anything else that you might feel is relevant. Initially, it would be impossible to tell whether or not you qualify for a debt write-off. However, that's what our case review process is for. It's a low-cost way of you finding out precisely what your options are and receiving professional advice and a written recommendation.